Taiex shares ended down by over 100 points today as the U.S. Federal Reserve lifted interest rates for the second time this year. After the Fed's quarter-point rate hike, U.S. shares fell and Asia markets followed, with the Taiex closing down 159 points or 1.43%. Meanwhile, analysts say they don't see the central bank raising its interest rates, at least not until after November's local elections.
Today, we've taken another step in that process by raising our target range for the federal funds rate by a quarter of a percentage point.
The U.S. Federal Reserve today announced its decision to increase interest rates by 25 basis points, reversing Wall Street's earlier gains. Asian markets also slid on the Fed hike, with Taiex ending down 159 points. Heavyweight tech stocks, including TSMC and Largan, lost over 2% at the close.
Some wondered if the Fed's interest hike and hawkish message would suddenly drive the greenback up and spark an exodus of foreign investors from the Taiex. But what we saw instead was that the U.S. dollar rose temporarily but could not sustain its gains. The U.S. was due to raise its rates. Similarly, Taiwan's rates are too low. But what we need to do now is encourage investment. Raising rates slowly or not at all. Either of these situations would be good.
Many corporate heads want Taiwan's central bank to follow the Fed, but analysts say a rate increase is unlikely during its September policy meeting. Because raising rates would put pressure on the Taiex, experts say the central bank won't make a move until after November's local elections.